I'm Olivia Bosnenko.
I'm Steve Guilfoyle, and this is Street Smarts. Olivia, we have a lot on our plate today, and we have a couple of great guests, so let's get this ball rolling.
All right, let's get it rolling, Stephen.
All right.
First,
what do you want to talk about? Trade negotiations, right?
Yes.
All right. Nice deal with South Korea. Set the table up for Monday. President Xi, President Trump playing nice in the sandbox. Mnuchin comes out on the weekend. He sets the tone. We cover all of Friday's losses on Monday and some of Thursday's losses. But now, mid-Tuesday, some bad tech news, some weakness in leadership out of Facebook. Where do we go from here?
have a MySpace.
How about MySpace? What actually does MySpace have value now that Facebook is losing so much value? And we really don't know what Facebook has to hide. I mean, Zuckerberg obviously is not built for this leadership role. I don't care what anybody else says. So tell me what you know about MySpace, because you're from that generation.
Well, first of all, I wouldn't say that Facebook's demise or what's going on with Facebook could help MySpace. MySpace actually has a decent scene, believe it or not, really, with the music and entertainment scene. Like if you have a band, it's great networking. That's really what it's used for. That's what it was made for, and that's what it's continued to be used for. Now, doesn't Facebook own Instagram?
They sure do.
So
and Instagram's hot, right?
That's hot.
That's a big deal. That's why Snap can't get any traction.
So if Facebook, that's what it's losing its competition to itself. People are going on Instagram. They don't have to talk with anyone. They can weed out the politics. You can go on Twitter for that if you want to. And that's it.
I mean, it certainly is a market for Facebook. I don't think it's going away. I just think that when Parliament asks you to show up, you probably put on a tie and show up.
Yeah.
That's just how I feel about it.
Well, I threw out Facebook after college, so who knows who has it, what's on it. I deactivated it. I don't know.
Yeah. So
that's
anyway,
all I say about
tech in midday here on Tuesday, tech's in free fall. NVIDIA announced that they're going to halt, for now, their autonomous driving program, which has a lot of people guessing about their artificial intelligence program, which is really one of the things they are best at, aside from gaming. They have a few things in the data center. They have a few things where they are considered top-notch in the semiconductor industry. But this certainly has shaken the tree a little bit as far as the semis go and as far as tech in general. So between Facebook and NVIDIA, now you have the whole ETF rollover game starting again.
Yep, exactly. And then with all this action happening, people might be looking for a safety play, right?
Which is, for now, it's good, even though they're mostly high-priced stocks, would be defense. I mean, yes, you have treasuries, which people are looking at. You see the compression on the 10-year yield, right?
Well, people who went into treasuries during the volatility didn't really do that well, right? Over the course of the month.
Well, but they're flying to it now because they expect to get paid. And then there is gold.
And then there's gold, which is why, Stephen,
every week here at Modern Wall Street, we like to come at you with a market rush.
But today
it's a little different.
We have something for you. It's time for
a very golden
market rush. With us today, we have Dave Tiger Williams of Strategic Gold, my friend from the floor over a 34-year career. Welcome to the show, Dave.
Thank you, Stephen. Thanks for having me. Hi, Boz. How are you?
Hey, it's so nice to have you.
It's great to be here.
I don't know if you noticed, but Bitcoin's down 43% through the quarter. Google's search for Bitcoin is down 70% through the quarter. That leads me to believe that the retail investor is becoming less interested in a space where he or she may have suffered some dramatic losses since the height of that market. And maybe they're headed towards something else if they're drawn towards an alternative to stocks and bonds. Maybe those markets scare them as well. Maybe they're headed to gold, which is your ball game.
I'm not sure if they're headed to gold yet or not, Stephen. I know that they're definitely getting out of Bitcoin and getting out of cryptocurrencies in a big way. Those cryptos have suffered tremendous losses since January or since the February, February highs. But in the gold space, I think we're looking at a totally different scenario now. As you and I have been discussing for years, I've always said gold is a safe haven. Gold is a place to be. It's an insurance against, stocks or bonds, going, too far one direction or the other direction. Gold is always there as a steadying force on your portfolio. And I think now that actually has changed, and it excites me tremendously.
So gold's down a little today. It's hit resistance, established resistance in the 1360s per ounce for physical gold several times now over a year or so. You think it's a good time to buy gold, that not just on this dip but in general, and you don't see this resistance as something sustainable.
No, I think that from a technical standpoint and from just buying gold like today versus yesterday versus tomorrow, it's very interesting. We're coming up to the end of a quarter, which is Friday, the end of the month, the end of the quarter. Gold is, like as you say, bouncing up against some resistance as it has in the past at these levels. I think that the 1355 area is key technically, and if we close above that for the end of the quarter, I think that's a tremendously bullish sign for gold. If we don't, I'm not really concerned because I think you have to own gold, and you have to own gold soon to participate in what's about to happen in the gold market.
So you're saying, technically speaking, we're getting set up for a breakout, possibly?
Yes.
As soon as this Friday?
Well, this Friday could be a big indicator on if it's going to break out or not. If it closes above, let's say, 1350 for the month, the quarter, the day, the month, the quarter, I think that's a big deal, technically.
Now, as a trader, I see this recent gold strength. I'm a fan of gold. Not like you, but I'm a fan of gold. But I see dollar weakness as a propellant for gold most recently. But what you're talking about is something completely outside of all the market forces that I measure when I look at the market.
Yes. So when we talk about gold, you talk about dollar weakness, you talk about debt levels, we talk about all those different things to say, okay, this is why gold is necessary in anyone's portfolio, whether it be in large institutions or whether it be small individuals. You got to have some gold to protect against these things. And that's always been our stance at Strategic Gold, and that's why we got in the gold business to begin with, back from the days of my father and my grandfather. What's different now is that we're talking about an asymmetric trade, meaning that it's a trade that depends on nothing else. It doesn't depend on the dollar. It doesn't depend on debt levels, which are out of control. It doesn't depend on lack of institutions owning gold. And if institutions used to own 3% gold, now they only own less than 1%. If they get back to that 3% level, that's going to increase the price of gold. None of that is material to what I think is going to happen in the gold market. That would all help with the price of gold. That would all play into it. People are going to talk about it, but the trade I'm talking about is separate from that. So, what?
I want to get in.
Go ahead, get right in.
I want to get in. How do I get in?
To get into gold, you have to buy physical gold. The trade I'm talking about is when we talk about gold, and even the big players now, they talk about GLD, they talk about swaps, they talk about futures, they talk about all sorts of different gold paper products. Gold paper is, the difference between gold and gold paper is light years. It's enormous. Futures were developed because you needed to balance crops. Crops would be grown, they would be consumed or whatever, and the futures trading would balance out the price between the growth and the actual consumption of those products. Gold is never consumed. Gold is here. Gold is reserve wealth storage. So the futures market that has existed in gold since the 1980s, since it was developed, is really a construct that has limited the price of gold. And it's not an artificial manipulation. I'm not a gold bug saying that, they've been holding the price of gold down for years because they've manipulated. What I'm saying is that because they came up with the idea of futures, they being big bullion banks, large institutions, because they were able to sell those products, which they wanted to sell because they were make money selling them, it actually limited the price of gold. So what my point is, any piece of paper is basically a short physical gold.
Because it's highly leveraged. Because it's leveraged. And the research that we have noticed recently that there have been different points in the physical market where it's been difficult to actually buy the physical gold. Whether it's been 1 ounces, whether it's been kilos, whether it's been larger than that. So at those points, we're learning what's happening in the physical markets and why isn't that price correcting? If it's difficult to buy physical gold, why shouldn't the price be going up? Price is always the determinant on supply and demand. Well, it's because paper is the determinant in the gold market right now, and paper is leveraged to gold in excess of 470 to 1. We can come up with figures that you can access that the gold is actually leveraged 6,000. Diluting the price.
Diluting the price. And so if And it all depends on the relationship between physical gold and the paper gold. As long as the relationship remains intact, which means that if I can go and trade my paper gold in for physical gold, then I know that that relationship is intact and it's okay. It's 1929 when you walk up to the bank and say, here's my dollar, or here's my chit, give me my savings account, and they could hand you the money back. When that relationship is broken, then there's a problem. And right now, the relationship between physical gold and paper gold is skating on a razor's edge. The amount of float in the physical market is barely satisfying the demand for the physical. So if the demand for the physical, if my clients at Strategic Gold say, I'm not going to sell any more gold. If the price gets to $1,350 at technical rate, I'm not going to sell it. If it gets to $1,400, I'm not going to sell it. Well, all of a sudden, that gold is taken out of the markets because we have allocated gold. It's not in the marketplace. We don't allow our gold to be leveraged against as if like GLD or some of these other paper products. So if that continues to happen, which has been happening in the last 4 or 5 years, if that trend continues, then that physical float, when that relationship is broken between the physical and the paper, then all that paper has to find a home. It has to be, you have to satisfy those paper contracts. How are you going to do it? Through price. There's only one way. You can't do it through the amount of physical. It has to be done through price.
Certainly is eye-opening, Olivia.
Yes, absolutely. And he served that up on a golden platter for us and our viewers.
Thank you for joining us today, Dave.
Thanks for having me.
Now, tech has been a super hot topic as of late, so I'd like to introduce to our show Zev Fema. He is the research analyst for Jim Cramer's Charitable Trust at ActionAlertsPlus.com.
Yes, thank you.
Thank you for coming on the show.
Thank you for having me. Thank you.
All right, so you specialize mostly in video game research, especially eSports, right?
Well, we do research on the entire portfolio, so a lot of different sectors. But video games has been one that we've been bullish on for a while. We recently jumped into Activision a few months ago, and eSports is kind of what's leading the video game sector right now. So that's why a lot of our focus for video games is on eSports.
Right. It's actually, I'm long Activision myself, and I'm actually kind of disappointed in the name, as I'm sure you are as well.
Yeah.
Margins just don't seem to be there just yet. I mean, the esports leagues, such as the Overwatch League, which I guess is the big daddy of them all,
Right.
they're getting the ratings. They're getting better ratings than anyone expected. But
Yeah.
why is it unable to generate the kind of revenue that we were hoping for?
So esports is still, in the infant stages. I don't think it's the biggest league. The biggest one would probably be League of Legends, which is through Tencent and Riot Games, I believe, which Tencent owns. But esports is what we see as much more the long-term driver. So we don't think it's going to impact earnings that materially in the current year or maybe the next year. But we really do think that it's esports, as it grows in popularity, is what's going to push the video game industry more mainstream. And on top of that, the investors, especially with the Overwatch League, the investors behind it are kind of what's really pushing this industry.
I've seen that.
Yeah, so I actually
I think
have
the
some
Kraft
of them.
family owns one of the teams, right, as well as the Wilpons.
Yeah, so
Everyone owns a team.
Yeah, so Robert Kraft, New England Patriots, owns a team. The Kroenke brothers, behind the LA Rams and Arsenal, they own a team. Will Pons, COO of the Mets, they're behind a team. And then you have other people that are invested slightly more indirectly. So NRG is a company that sort of that has esports teams, and they play in different leagues. But members of that board include Alex Rodriguez, Shaquille O'Neal, Jennifer Lopez, Marshawn Lynch. So there are a lot of people getting in on this trend. But back to your question, as far as how it impacts revenue, we don't think it'll impact it so much near term, but we do see it as the longer term driver. Last year, there were, I believe, 12 teams sold at about $20 million a team, because they're really going for this franchise model, sort of a way to replicate what you see in the NFL, the MLB. And that price is expected to grow in the coming years. So we'll see what this year's team sales go for. But we really see it as what drives the video game industry. And as far as margin expansion, I think the story there is more so about the shift to digital. So video games are increasingly moving away from physical discs and more digital. So that's kind of where the margin expansion comes into play. And then on top of that, you have the downloadable content in-game purchases, all of which are increasing the monetary life of video games.
Are games like Fortnite a problem?
So, Fortnite, it's certainly a reason that we see some of the stocks getting pressured right now. I think it is an issue in the near term. You can't discount it. The one thing I would say about Fortnite is it's free to play. So I don't think comparing it to something like Call of Duty or Overwatch is necessarily apples to apples. But absolutely, it's something to watch. The whole free to play sort of movement where you can jump on this video game and it doesn't come at the cost of a different game. And they're making their money through in-game sales. So it is something to watch, but I do think it's going to be less of an issue the more virtual reality comes into the mix, because just the amount of resources needed to start developing these virtual reality games is not going to be something that just a few developers in their basement can kind of come up with. Not to say that's what happened with Fortnite, but you really are going to have to invest a lot more to get top quality virtual reality games in the future.
What are the other relationships? There's just so much technology involved. What are some other relationships that are involved with eSports and video game stocks or companies?
Yeah, so,
I'm thinking,
virtual reality is one. As far as tech that's kind of coming into the mix, you have Oculus Go that just hit. Facebook, Oculus Go, which is something that I think is going to sort of mitigate some of these fears that Facebook
like
has done.
Pokemon Go?
No, so Oculus Go is the virtual reality headset. Actually, I'm glad you mentioned Pokemon Go, because that was brought up by analysts as a reason to not be as concerned with Fortnite. Pokemon Go, it was a major hit when it came out. It was also free to play. It kind of played off the whole mobile, the augmented reality. It lost, I think, 75% of its player base in year one. So I'm not saying that that's what's going to happen with Fortnite, but we do see a lot of hype in the beginning surrounding free-to-play games, because there's no reason not to download it. I've downloaded Fortnite. I think I played it 2-3 times, and I haven't really touched it since. But that's going to go into the monthly active user. That's going to contribute to the engagement numbers and things like that. Mm-hmm. So that's kind of the issue with free-to-play right now, is it is being compared to these other games, and it's not exactly apples to apples.
It's like you mentioned, Overwatch, Call of Duty. Mm-hmm. They've had a following 10 years in the making, and so that's why it has a little more oomph to it. Yeah.
Well, that's a very good point. I mean, these games have very loyal followings. So that's the other thing for investors looking to get into the space. You really have to find a company with staying power. You can't just invest in the one game that, the thing that's hot right now. That's one of the reasons we like Activision. They have, they previously acquired Blizzard, which has World of Warcraft, which is massive, very popular in China. And they have the Call of Duty franchise, again, like you mentioned, Overwatch. So they really do have this track record of successful games, and we like them because, again, the Overwatch League is really sort of the one really pushing to replicate the traditional sports model.
Mm-hmm. Is the extended play here the likes of NVIDIA?
Oh, the play off of this? Absolutely. I mean, the graphics are only getting better, and to render those graphics in real time without glitching and everything, you need the best GPUs you can find, which are made by NVIDIA. And on top of that, again, going back to virtual reality, that's just more, more intense graphics that need to be processed in real time. You're talking 360 degrees, not just the screen. So absolutely, NVIDIA plays off that, which is why over 50% of their sales come from video game related chips. So yeah, absolutely. I think NVIDIA is one way to get onto it, but there's a number of other players. So one thing I've noticed is a lot more people, when they talk about Microsoft, are talking about gaming. Microsoft sells the Xbox at 0% gross margins. They're basically selling the system at cost because they know they're going to make all their money off of the games. And right now what they're working on is the Game Pass, which is basically the Netflix for video games. So Microsoft, that's another way to play video games, although you're more so playing the cloud and the Azure growth. But the interesting thing is with that streaming video game platform, that's all going to feed into Azure revenues. The more they store on the cloud, the more subscriptions they have, the more growth you'll see with Azure.
Yeah, doesn't that take a lot of memory?
Yeah, absolutely. As far as storing the games and everything, I think even today, if you buy the disc, you'll still have to put about 30-40 gigabytes of a downloaded content onto a PlayStation or an Xbox or whatever it is. And you've seen since like PlayStation 2 to 3 to 4, the amount of memory being taken up on top of what's being stored on the disc. The Blu-ray discs are holding somewhere like 54 gigabytes on a disk, and you still have to throw on another 50, 60 gigabytes. So that also, it plays to the data center. So you're talking NVIDIA, you're talking hybrid clouds like Microsoft. Amazon's getting in on it. They're the owners of Twitch, so they're getting in on it. They just introduced their own gaming engine, so like software to develop the games in. But yeah, so that's why this industry excites me, because it really does bring in the data center. It feeds to the stay-at-home economy. The virtual reality is going to feed to the experiential economy. And pushback that I get all the time is that this is, it's toys. Like, this is kids playing in the basement. This isn't something you can really invest in. But the way I see it with virtual reality, there are ways that they're going to start playing to an audience that is not as interested in video games. We're already seeing it where you have interactive stories. So instead of watching a 2-hour movie passively, what they're starting to do is develop these stories designed for virtual reality. And you're not really playing a game, you're kind of just going through a storyline. The different decisions that you make will affect kind of the path that the game takes.
That's pretty
Is this in a group setting or is it individual?
Well, for the video games, the ones that I've seen, it's more so an individual thing. But it plays, again, to the people who don't necessarily want to sit there and play video games, but they do want some kind of entertainment other than TV. I mean, we know more and more people are cutting the cord. Cable subscriptions are getting hit. And while some of that's going to Netflix, Hulu, it's also going to video games, especially with online play coming to the forefront. I mean, I know groups of people, and the way they hang out on their Friday night is they all mic up, they all jump online, and they play video games together. They're hanging out, they're talking about how their week was, but they're doing it like video games is kind of what brings them together and lets them do that. A little trash talk, and just hanging out pretty much.
Some yo mama jokes.
What are the chances that these individual games or entertainment features, whatever, they actually create their own little economies where you can put actual money into the game so that you can function within the game?
So it's interesting. We're already starting to see some of real money coming into play. That's kind of what happened with the loot boxes, and people talk about gambling. But one way that I have seen sort of money changing hands is people go in, they buy a rare item, a weapon skin, something like that, and then they almost gamble on it. So because you can transfer these things to other people, and they're selling it for real money.
A weapon skin, that's like the color, right?
The color of the gun or the character. Mm-hmm. We had an intern for us for a little while, and he would tell us all the time about he would win these loot boxes and sell it for cash. And I couldn't believe it, but
that's incredible.
It's already happening.
Oh, I know people who they'll sell their team. They'll sell their,
absolutely.
Definitely
for a lot
part
of
my
money.
generation.
For a lot of money.
But I am willing to try to make money off of it.
Yeah, absolutely. I mean, I've started
true.
to see, people talk about fantasy esports and gambling. There's websites so you can do esports betting. It very much is starting to look more and more like traditional sports teams.
Well, I saw that when I called the people who play these games a bunch of basement dwellers in a recent article. The backlash I received was astounding.
No, if you go on Twitch, I mean, they're very. It's.
I mean,
my generation.
there's a lot of people out there, and they.
Oh yeah.
They are mighty.
It ranges from like
sure.
cool to cool people to nerdy, whatever genre you are and whatever genre game you play.
Well,
yeah.
Thanks for coming on our show today, Zeb.
Really,
Thank you guys
this
for
is
having
so
me.
cool.
That was Zeb Fema of Jim Cramer's charitable trust, actionalertsplus.com.
Plus,
Olivia, market's still bouncing around?
they are to the red zone.
All right, they've been sinking.
They got red zone, Steven.
All right, volatility continues to reign on Wall Street here on Tuesday afternoon. Before we let you go, you got to keep an eye on the final reading for fourth quarter GDP. That comes tomorrow. We're looking for 2.7%. And we have core PCE on Thursday, which may or may not decide the way that day goes. Then you'll get your holiday on Friday.
And we'll see if it will be a Good Friday indeed.
That's right. Happy Easter, everyone.
Happy Easter, guys. Thanks for tuning in.